A credit score is a beautiful thing, or it could be something that can be a complete nightmare. Having a great credit score is the key to unlocking a lot of different doors. But when you have a bad credit score, that can mean a lot of trouble for you. I'm Carmen Perez, and this is Getting Rich. Today, we're going to talk about one of finance's biggest catch-22s, building credit. A credit card is the quickest way to build good credit, but most of the time, you can't get a credit card without good credit. So what do? Enter the secured card. This little guy lets you establish a credit limit with a cash deposit. So let's say you put down $200. Your credit limit is $200. If you don't make the payment, the bank just takes it out of your deposit. But if you keep making payments, your deposit stays untouched and your credit score goes up and up and up. Best yet, some of the better secured cards will allow you to upgrade your account directly to an unsecured card. Today, we're gonna be chatting with a financial beginner. Let's go. Emma, welcome to the show. Thank you so much for coming on. Tell me about yourself and what questions you have for me.
I'm a barista, I'm a nanny, I'm an actor, lots of gigs.
All the things.
Yeah, all the gigs. And I think my main question for you is, what's a credit score and how do I increase it?
Okay, cool. So a credit score, think of it as your financial fingerprint. It's made up of the length of credit history, your new credit, your credit mix, the amount that you owe on there, and then your utilization of that credit.
Okay.
The two biggest are the amount that you owe and your payment history. So that's what a credit score is. Essentially, it's your financial fingerprint.
Yeah. How do you increase your credit score?
Yes, so a great way to increase it, you can get added as an authorized user. If you have a parent or maybe a friend that's willing to do it, you can get added to their account. They don't have to give you access to the card, but you can kind of piggyback off of their good credit and then adding different things as you go along. So you have your credit cards, you have your auto loans, you have your student loans, you have your mortgages. So adding those different things helps build your credit. But the biggest thing, again, going back to those two main factors that take up the largest percentage in the calculation is payment history and the amount that you owe. So pay on time, pay often if you can.
Yeah.
And to give you an example of how and why credit is important, I've been on the bad side of credit where I've had a terrible credit score. I defaulted on my student loan.
Oh, wow.
Don't tell anyone. And over time, that cost a lot of money.
Right.
Tons of money. Stuck in this cycle of having bad credit, getting a high interest rate, and then not being able to pay that off, and it just continues
you're
to
like
cycle.
Stuck in poverty.
But on the flip side of that, I've been able to purchase a home with a really good credit score and a very good interest rate on my house because I have really good credit now. And that lower interest rate allows me to pay back less over the life of the loan. Long story short, bad credit can cost a person a lot of money over their lifetime.
Thank you.
Yeah, so I'm so happy that you came on the show. I wish you all the financial success in the world, girl.
Thank you.
Yeah, absolutely. Keep these ideas in mind to help you stay motivated about your credit score. Good credit is major for renting living spaces, especially in a saturated market. A good credit score is a one-way ticket to beautiful spaces. Think a loft flooded with natural light. Real talk, in some states, employers can check your credit history, and having good credit may put you ahead of the competition. Insurance companies use your credit score as an indicator of how likely you are to file a claim. To them, a higher credit score means you're less of a risk. And always remember, anything can be fixed, but not by crying or ignoring the problem. You've got this.